Hello and welcome to the final edition of Citrus Bites for 2023 from our offices in Sevenoaks. As always, a brief look at a few bits of economic data, and then I'm going to introduce today's fantastic guest. As it is the final episode of the year, I thought we really should start by just reminding ourselves of where we started 2023, what people were saying about 2023 and what was likely to happen, where we finished, and then importantly, so where does it leave us heading into 2024? So for those that can't remember back to January and the economic data that we talked about, then actually the forecasts weren't particularly great. The IMF were predicting a really challenging year. One of the most talked about words for the UK was the R word. It was recession. CPI, so inflation, although it was off its high, was still running at over 10%. So we still had double-digit inflation, and interest rates had crept up from their all-time lows to be standing at 3.5%. So overall, for the start of the year, there was already talk about all of the challenges facing the UK. And as I say, the fact of the word recession, it was more about not if it will happen, but how deep a recession it will be. Move forward to the summer, however, and the IMF had already reforecasted their predictions for GDP, so for growth in the UK, upwards a few times. That big R word had started to ebb away slightly, but had been replaced by an awful lot of conversation about interest rates, the cost of living crisis, the particular impact on those families that perhaps could least afford some of the essentials that increased in price so significantly. Interest rates were standing at 5.25%, so significantly up from the lows that were experienced in 2008. There was a lot of talk about mortgage rates, and particularly for homeowners coming off mortgage products, so fixed rates that were expiring during 2023, and the average increase in mortgage payments that those families were going to be seeing. So although inflation had started to or continue to cool as we went through to the summer, actually that interest rate figure was the one that was causing so much anxiety in terms of what it was doing to companies who were wanting to borrow and grow potentially, but also to families with mortgages and what was happening to those mortgage payments. So end of the year, how many of the predictions came true and where are we now? Well, for those of you that have watched Citrus Bites over the last few months, you'll know that one of the things I've talked about quite passionately is the state of the jobs market, which in spite of all the doom and gloom around kind of the UK economy, the jobs market has been extremely resilient. And actually, although most recently the unemployment figures did see a slight change upwards, the number of vacancies has therefore fallen slightly. We're still in the UK seeing vacancies at nearly 1 million. It's about 930,000. That is still, although down on the previous month by about 45,000, we're still almost 150,000 vacancies up on the quarter prior to the pandemic. So going back to Q1 of 2020. So we're still experiencing that really significant employment squeeze where the number of vacancies is running broadly flat. Let's be honest, there's not a massive margin in the decrease in vacancies. The number of people not working, the number of jobs we're still trying to fill. So obviously, remember recently the Chancellor and that workers' budget, trying to encourage workers on people that weren't perhaps active in the work environment back into the work arena in order to try and crack this vacancy situation that's been challenging for a few years now. So that part of the economy is still looking pretty strong. Interest rates, we know interest rates have now been on hold since August. So they've been on hold right through to December. And the most recent meeting from the Bank of England has kept interest rates on hold again at 5.25. And why is that happening? So why, in spite of all the rhetoric and the IMF's latest predictions, which are quite challenging again for UK growth in 2024, why is it that interest rates are still being held the way they are? Because most of the conversation now is about when are rates going to fall? Well, simply, we're not seeing that reduction in inflation as much as we want to see it yet. So although it's significantly down on where we started the year, now down to 4.6%, so less than half of where we were in January, that's still well above the Bank of England's target of 2%. So we've still got a way to go to know for sure that that inflation challenge has been conquered. And right now, with the job situation still tight, Average weekly earnings still running at a pretty healthy level, not quite as strong this quarter as the most recent quarter before it, but still running pretty strong. Clearly, members of the Bank of England's Monetary Policy Committee are still to be swayed when the time is right for interest rates to go down. In fact, out of the 9 people who have a vote to cast in that committee, 3 of them in the most recent December meeting actually voted to increase rates still. Such is the concern about whether inflation has really been tamed. That's quite different from some of the recent announcements made in the US, where obviously there was much more rhetoric around interest rate decreases coming earlier into 2024, possibly not in Q1, maybe Q2. So slightly different story in the US, but in the US, it's fair to say inflation numbers are lower than in the UK. So part of this problem, as we've been talking about over the last few months, is this still sticky inflation figure. Although it's down, we're still over double the Bank of England's target. So with the conversation so heavily focused on interest rates and the impact that's had on homeowners and the potential impact homeowners with mortgages, the potential impact that's going to have into 2024, thought it was a really great opportunity to invite today's special guest, Holly Bettles, back to Citrus Bites to ask her, from a mortgage and protection advisor's perspective, what she's actually seeing, because there's been so much rhetoric around the housing market and the knock-on impact into mortgages. So it's great to be able to welcome Holly Bettles back to Citrus Bites today. Right, Holly, before I come to the first question I'd like to ask you today, I'm just going to read out some of the things that I've read over the last few weeks that actually make me go, I'm really not sure what's happening here. So I've read some of these things. House prices in November, so month on month, saw a 0.5% increase according to the Halifax House Price Index. The Nationwide talked about house price recovery continued in November, so that seems a bit consistent, but actually both saying that year on year compared to this time last year, they're down. But then I saw something more positive by the FCA around mortgage advances increasing in the third quarter by 18.6% from the previous quarter, but they remained lower than a year earlier. But then the value of mortgage commitments moving forward, so this is kind of lending to happen in the further quarter, in the next quarter decreased by 16.5% from the previous quarter. So it looked like, things had gone up, but pipeline was looking down, but then house prices seemingly were going up. So there must be supply and demand. So I was thinking, well, that's a bit strange. And then I read one, which I thought was great, because actually earlier in the year, I think around August, a former member of the bank's rate setting, the Monetary Policy Committee, he said, obviously, homeowners are going to get completely whacked. This is going to kill the market off, hit homeowners like crazy. So I was looking at that going, oh, that's a bit weird then, that I'm seeing house price demand seemingly going up, prices going up, some lending. So I just sat there going, oh, I don't really know. People seemingly are still moving and wanting to, buy their own home and remortgage and things like that. So I guess the best way is to come to the expert who's helping clients with mortgages, etc., and go, Holly, what's going on? What are you seeing?
Good question. No, and I think it is. I think a lot of clients are feeling that way too. They read snippets, they read this, read that. Good news never sells any headlines on stories or newspapers, does it? So they're always going to focus on the minute, negative that they can find. And actually, as far as I'm concerned, from what I see from our clients, it's positive. No, we're not where we were 2 years ago, but you know what? That's expected. But we are definitely seeing positive signs where rates are still coming down. We're absolutely still lending to people. House prices, well, house prices are always going to be subjective, aren't they? Because you've got locality, you've got where things were inflated before more than they might have been or should have been. And therefore, I think the only thing that really matters with regards to all of those things is where you are as an individual, what you're looking to do, and having that discussion with a broker to say, this is where I am, these are my plans, these are what I want to do. Is now the right time? Because that's what we're here to help with, to go devil's advocate over here, but actually positives here are you can do this, 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 and this. If you waited, you could do this, this, and this. And I think try not to pay too much attention to all the hoo-ha that goes on around, and just have a chat and find out how it relates to you.
And actually, that's really helpful. You just mentioned a word there. And I think when I spoke to you before, so you came on Citrus Bites, it was quite a few months ago now, but you mentioned the word down there, which is not the word you were mentioning several months ago when you joined me, because the only word I think we were talking about then was the word up. So it sounds like we are starting to see that shift in lender products slightly, where actually those numbers are coming down from where they were.
Absolutely. If we compare now to 12 months ago, oh lordy, I wasn't the biggest fan of my job 12 months ago, the nicest possible way. Don't get me wrong, I love helping my clients, but it was hard. It was late nights, it was having to move quick, it was lenders turning off systems midway through. And the really good news is we're not there anymore. The emails that I get in my inbox are positive ones because the rates are coming down and they're opening up criteria. And you compare that to 12 months ago, and the rates that we were looking at 12 months ago, everything has definitely improved and rates are coming down, and we expect them for a while to continue to come down.
Actually, it's a good point because I seem to recall like 12 months ago, lenders almost, for periods of time coming out the market altogether, the lending market at times. So interesting to see how that's changed, 12 months down the line. So from your perspective, Holly, as a mortgage broker, what is it that you think you can do right now to help clients the most?
I think it is about knowing your lenders. And as a broker, that is our top thing. Lenders are here in order to help give people what they need to do. So you've got the changes that lenders are making. So things like accepting lodgers income, never did that before. Taking second jobs, the amount of time that you spent in a role, they've opened that up further. So they are looking to help um, clients borrow. The affordability, they may have a cap on what they can do with that, but if they're adding in extra things and opening things up further along down the line, then that means they are making life a whole lot easier. So that's probably the first thing. The second thing is absolutely with clients looking to tie back into a new rate, so what we call a product transfer. If we can help with that and make sure clients have looked at their full situation and have considered all of their options, I don't think we can give better value than that right now.
Yeah, I think actually that's a really interesting point again, because I seem to recall the forecast for this year, which is what caused so much kind of the speculation around what would happen to, for borrowers back in July, August, was the number of clients coming to the end of their fixed term product and what would happen to them. And I think if I remember correctly, the figure next year is even bigger actually for those clients coming to the end of a product.
Yeah, they reckon a 10% increase from 2023.
Okay, so there's probably not brilliant, but probably over 1.5 million mortgage borrowers who are going to face this next year. And actually, just thinking it through, it doesn't matter if they're coming to the end of a 2-year, 3-year, 5-year fixed, they're going to be seeing a payment increase.
Yeah.
And therefore, it's how they go about, kind of going about securing that next product that's going to be really important.
Yeah, absolutely. It is tempting when you get the text or the email from the lender to click the button and go, oh, I think I've sorted that now. But actually, use your broker, like the services that we have to be able to offer in order to make sure that it's done correctly. You've looked at all your options and you will get that best rate right up to that last minute. You won't get that by just pressing that button. The lender is not going to come and tell you if there's a better rate after you've clicked on it. Unless you want to go and talk to them again and diarise and look at doing that all the way up until your current fixed rate finishes, you're going to potentially miss out. And it might be the right thing to tie back into a fixed for you, but there are other options which, dependent on your circumstances, might work better for you, depending on future plans or your budget. There might be things that we can look at to do, which, again, you're not going to know. You're not going to get that advice or that level of service just by clicking on the link.
Yeah, it's a good point. And I suppose you also have the benefit of clients being open with you and telling you how they feel. And I'm guessing some of that is different to how they felt 5 years ago. So what are clients saying to you now in terms of how they're feeling about borrowing?
Yeah, I think definitely we get more clients coming in, maybe not knowing so much what they want to do, as opposed to before, where they go, yeah, I just want to pop onto another 5-year fixed, Holly, or I thought I'd do a 2-year, the one this time. And it's really it's nice. I mean, I wish it wasn't necessary, but it's really nice to be able to reassure clients and say, you think it's going to be this, but actually it's this. And yes, it's an increase, but it's not as bad as you thought it was going to be, because they've read those headline rates that you were talking about earlier and all those scaremongering things in the newspaper, or I can say, have you thought about looking at a tracker rate instead for a while? You have potential opportunity to do that, and just being able to reassure them where maybe they might have been thinking, oh, I don't really know what's going on here, but actually I do. Your broker will. So go and have the chat, talk about it, talk it through. And I think, clients, that's what clients are coming to me for at the moment, to make sure they've got all their options.
Brilliant. That's really helpful. It's nice to hear what clients are asking. It's nice to hear what those options are looking through to next year. It's nice to hear actually there's still plenty of activity going on in the market. The headlines seemingly are right, most of them, in terms of, and actually the UK has this challenge, isn't it? We are building roughly 100,000 too fewer homes every year. So we're short by 100,000. So that demand situation exists. It's not going away. And therefore kind of interesting to see how that's linking to the activity that you're seeing. Holly, thank you. It's always great to have you on Citrus Bites. I really appreciate it. But also, you don't get away that easily. One of the things on Citrus Bites is that you need to answer the questions from last month's guest, and you get the chance to set the questions for next month's guest as well. So rewinding to last month, we had the fantastic Shona Campbell on for Friends for Families, and all the great work they were doing with kind of deprived families, and particularly children around Sevenoaks and Dartford areas. Now, Shona left a really interesting question for you, which is, what social policy would you like to see introduced in this country to reduce poverty and inequality? There we go. What a great question for a mortgage and protection advisor to receive.
The pressure to follow up those big shoes. It is a really good question, and it is one that I sat down and scratched my head over. I think, as someone with two kids of my own, I think absolutely the best way to try and help with this is to make sure we've got enough funding in education. I was listening to the radio the other day, and a city near where I live has the highest rate, or highest percentage ever, of schools that are going to end the year in a financial deficit. How is that the case in 2023? And if we can make sure schools have enough money to even just do the basics, I feel like that will give people the opportunities and the options to be able to make other choices, and to help with the fact that it will give them other chances to reduce poverty and inequality and move things forward.
Thank you. What an interesting answer, and what a challenging place for so many schools to find themselves in towards the end of the year. And I'm sure a lot of that, as you say, is particularly extreme in what you heard, but replicated through the country as well. So yeah, thank you for that. But actually the flip side to having to answer that question, Holly, is you get to set the next one. So over to you for this month's question, please.
Okay, so obviously that will be for January, and people will have set their New Year's resolutions, but just a little bit of food for thought in that scenario. I guess my question for the next guest would be, what would you encourage viewers to do in order to improve their current or future financial circumstances?
Fantastic. A nice link to ask people at the start of the year. And hopefully people won't have broken all of their New Year's resolutions by the time they watch Citrus Bites.
I'm making no promises.
Holly, thank you so much. I know you're busy, so I really appreciate you finding the time to come and join us today. To everyone watching, and to everyone who's watched, you're not finished. So I'm going to come back to you.
I'm going to squeeze one more thing in if I can. I am busy, but that doesn't mean I haven't found time to do some Citrus Bites mortgage editions for next year as well. So keep an eye out for those.
Brilliant. Okay. Thank you for reminding me. And to everyone that's watched a Citrus Bites this year, thank you so much. Thank you for the feedback. Thank you for the support in producing them. It's very much appreciated. To Simon, who actually makes them happen and make sure that we try and look our best when we have guests on, etc., and the sound quality is okay. So Simon, thank you so much. To everyone who supported us again with Friends for Family and donations, we really, really appreciate that. And it's a chance for me to say thank you as well on behalf of Friends for Families who asked me to say that. But thank you for support. Thank you for watching. I look forward to loads more editions in 2024. And in the meantime, have a fantastic festive period and a happy and healthy and rewarding 2024. Thank you very much.